Nifty just gave a breakout from its bearish trend. FIIs are coming back to the Indian markets. The index finally gave a positive month after 5 months of straight selling. So what does this mean? Are the bad days over and Nifty is going back again to its all-time high? Or is it all just a fake signal or trapping just so there is a FOMO and greed in retail investors? Let's analyze this topic in today's video. First, we need to analyze this chart. We can clearly see from 26,000 levels, Nifty was in a bearish trend. And finally, some people might say this is a very good breakout. We need to understand this fact. There are a lot of times when there is a fake breakout, because if you look at this chart in this pattern and if you compare this another chart which is for trend inducement, you can clearly see it does signify that there might be a bearish phase coming back again. So what is trend inducement exactly? See, trend inducement means the deliberate price movements caused by the institutions like FIIs just so retail investors are lured into these prices and giving them a FOMO and greed that they really should have bought the dip. See, we need to also understand this another term called as the dead cat bounce. So what does dead cat bounce exactly mean? It refers to the temporary recovery of a declining asset. If you remember in the starting of the video, we did notify after 5 months of straight selling, Nifty finally gave a positive month, because it is never possible for an asset to reach its 52-week low after declining from a good amount of level. See, a lot of people in the market right now believe that this upside movement is actually a gamma trap. So what exactly is a gamma trap? Let's take an example for better understanding what exactly is gamma trapping. If there is a FII in the Indian market, they sell the call option of Reliance. After shorting the call option for Reliance stock, they will buy Reliance shares just to mitigate the risk exposure that they had with the call option of Reliance. This way they are able to stay neutral and hedge their risk. But if you are a retail investor in this whole story and you only see the fact that the FIIs are investing in the Reliance stock, you will start to believe that the FIIs have returned back to the Indian stock market and you will start to invest in Reliance stock just because they are also now investing. This whole phenomena in simple terms is known as gamma trapping, where these foreign institutions move the market prices according to their convenience of removing their risks of these options, and due to which the retail investors are lured into buying more assets. See, we sum up all these factors, the gamma trapping and the charts that we saw in the beginning of the video, it definitely sums up the fact that Nifty might not be in a bullish rally. It just might be a fake movement just so retail investors are lured and trapped in the stock market. Also, if we witness the yield curve right now, it is near its all-time high this year. It does mean the 10-year bonds are giving great returns, and great returns in bonds often leads to huge selling in stock markets. Why? Let's understand this again from an example. If there is an institution investing in the stock market and they have had a huge amount of returns from it in the last 3 to 4 years, and now they feel that the stock markets are very risky at this point, so they will book their profits from the stock market and move to safe haven assets, that is like bonds. And whenever these bonds give higher return, more investors are prone to invest in these bonds instead of the stock market, because bonds are the only instruments which somewhat guarantees return to the investor. So after watching this video, what is your analysis? Where is Nifty heading exactly? Is it just a fake breakout, or do you actually think there is still one bull run left in the market? Let us know in the comments down below. Till then, don't forget to have a good day. Thank you so much.